Cool. Yes, morning everyone. Hope you're well. Thank you very much for joining us for our Demo Day Wednesday 2025 recap and what to expect in 2026. I'm David Scholes, I'm Director of Wealth Sales, so I'll walk you through the webinar. I'm feeling a bit grim today. I've got a cold, so my apologies if I sound nasally and I cough throughout the presentation. My wife might be in earshot, so I'll stick to the what I fed her earlier and said that it's man flu. It's not a cold. It's much worse than a cold. But I'll be a trooper and plow on regardless. So again, thank you very much for joining us. In terms of an agenda, we're going to walk through all of these different applications we've enhanced this year, and there's about 20 plus development improvements we've managed to deploy across analytics, cash calc, Advisor Asset, Contengo, Nexus AI, etc. So my mission today is to try and cover off all of them within 45 minutes to an hour. We fully appreciate that every single time we launch one of these new improvements, we make a huge amount of noise about it on marketing, via LinkedIn, all the different to us. But you guys are obviously incredibly busy, and you may only hear of a few of them. So today's really about kind of taking stock and looking back at what we did in 2025 and make sure you fully appreciate exactly what we've built for you. And I suppose more importantly, how to extract as much value out of these tools and features as possible. So we'll start off by introducing you again. We always do this at the start of every webinar to what is Nexus. Nexus is our platform that we're trying to build out. That is this one-stop shop solution for financial advisors. So we'll take a bit of a step back and explain in the first couple of minutes what that is exactly and how these different features kind of play into that. But then, as I said, we'll then look at analytics. What are the core features we've added to that application this year, notably the MPS universe improvements, surfacing more MPS data broadly across the suite of tools you have available to you in analytics, but also the DFMs we've added for you in our charge comparison tools within analytics as well. So we'll cover those off. Also then have a look at cash calc, the 11 new features we've added to that. Primarily the gross modeler, but there's also been some other improvements to our net modeler as well. So I will kind of explain the subtle differences or not so subtle differences between the gross and the net. Then we're going to have a look at Nexus AI. We spend a lot of time building on top of our existing applications, but we've actually spent a lot of last year building brand new applications, which is Nexus AI. So we'll talk about that as well. What is Nexus AI? What does that deliver? And then also, it's not just about building on top of our existing applications and improving them and building brand new applications from the ground up. It's actually about acquiring applications as well and kind of syncing and bridging those into this Nexus ecosystem. So we've acquired, as many of you will be well aware, a few months ago, we acquired Contengo. So the guys are busy at the moment kind of tethering that into Nexus. We'll take a brief look at what Contengo can do. But equally, there will be webinars set up for Contengo over the coming weeks, and there's usually plenty of time at the end for questions. So those of you that haven't used GoToWebinar before, there should be some sort of question box somewhere on your screen as we're going through this. Feel free to ask as many questions as you like, and the team will be in the background answering them as we go. And any that aren't answered by the end of it, either I can jump on and answer them, or we'll make sure we get back to you directly after the webinar. Super. I've got a bit of a cheat sheet here. Let's just minimize this. Hopefully you can still see this. I've got a bit of a cheat sheet. I put a LinkedIn post out a couple of days ago just to kind of promote this webinar, and you can see all of the different things we've added. So I'm going to use this. Probably going to be going back to this to remind myself of the 20 odd features, make sure I don't miss any. But as I said, before we get going on this, just want to take a step back and explain Nexus ecosystem. What is this Nexus ecosystem we're building? Historically, we've only really had analytics, which is our fund research system, but you've probably seen over the years, we've been building that out and adding in these different applications, tying them and bridging them together to create this ecosystem of solutions. That the idea is that this ecosystem should do everything that the advisor needs. When we look out across that advisor industry, we see you doing all these different disciplines, or having to be masters at these different disciplines when it comes to risk profiling, when it comes to reporting, when it comes to platform due diligence, when it comes to MPS analysis, when it comes to cash flow. I could go on, annual reporting, yada, yada, yada. There's all these different things you've got to do. And our job, we feel, is to build an ecosystem that does all of that for you, but in a way that it's kind of seamlessly integrated, so you can float between these applications. And part of that ambition is to create, this should be launched fairly soon. As I said, this webinar is about trying to look into 2026 and show you what life will look like over the coming weeks and months. The ambition is very much to create a Nexus Wealth login. So rather than having to log into the underlying applications, you should simply be able to log into your Nexus Wealth platform, and then you can dart across into those underlying applications. So the options on the left there, I can dart across into analytics, I can dart across into CashCalc, I could dart across into Contengo, etc. But equally leveraging AI as well. So in front of you here are all the different AI agents we're kind of pursuing and trying to figure out which ones we should prioritize. But how can we now use AI and new technology to leverage even more value out of that existing architecture we already have? And that looks at things like suitability reporting. That would seem to me to be a happy home for AI, compliance reporting, even just simply be able to get the underlying content. If I want to go and get a fact sheet, or if I want to go and get a chart, or if I want to go and get a cash flow for a client, should I have to log into the underlying applications and click 5 buttons to get that? Or should I simply just be able to vocalize and say that to an AI agent and it will go and click the buttons for you? So that's certainly, when we look out into 2026, 2027, that's very much the direction of travel that we're looking to build. Ultimately, at the moment, what does Nexus look like? It's analytics, which we'll be diving into in a minute to have a look at the new improvements. But analytics gives you the fund analysis, it gives you the platform due diligence and charges, it also gives you the risk profiling. CashCalc gives you completely different disciplines: cash flow, client portal, and calculators. And as I said, we've now got Contengo, which we're calling Command Deck, which gives you basically a full 360 view of your firm's data. Your assets under management, how many assets sit with each looking at, etc. All of that data we're now able to aggregate from all your platforms and the back office systems, giving you that full 360 view. But then, because we've got that data, being able to automate the reporting for you, but also more importantly for us, we've always been experts at time-weighted returns. Now we've got all the valuation and historic valuation data, transactional data. We can provide money-weighted returns as well through Contengo. So as I said, we're busy joining all of this together, and that will be very much the focus of today, explaining how we've joined a lot of this together already in 2025. What are those integrations we've built? But equally, as you can see, this kind of hopefully paints a bit of a picture for you of what life will look like as we roll into kind of further into 2026. So let's start off with analytics. Let's move that aside. Let's get rid of that. So start off with analytics and explain some of the features we've added last year, because there are quite a few. So one of the core additions we've made to analytics is the surfacing of more MPS data. Those of you that have used and seen and are aware of analytics will know that we've always had MPS data on the system. So when I want to get access to LGT's models, IBOS models, etc., the Transact Model Portfolio Solutions, on the left-hand side, I click on this little Portfolio Tools tab and click on the MPS directory, and that will give me all of the MPS providers. There's about 85 of them now. And I simply click on the ones that I want to get access to. Fundhouse, for example, it gives me a marketing spiel about who they are, what they do. And then I've got Activate Me. I can click on the Activate Me button and it'll activate me for their model portfolios. And what that means in practice is, back on this main screen, under that portfolio tab, if I open up this long list, I'll have a long list of all the portfolios I've built, but equally I have a long list of all the portfolios that have been enabled on my account, in this case, the likes of LGT. So I can click on the LGT balance model portfolio, and I can do what I like with it on the right-hand side. I can go and create charts, I can create tables, I can create reports, I can feed that into CashCalc. We'll be looking at that in a minute. I can feed that into the risk profiling tool, etc., etc. The thing that the directory isn't really doing, though, is giving me that full view of the entire MPS universe. At the moment, I can only really get access to the models that I'm enabled with, and no one's really going to enable themselves with 86 different providers and then have 86 provider models in here. You're talking about 3,000 model portfolios in the system, and then there's not really any suitable features on analytics that then gives you kind of filtering capabilities across each one of them. And equally, there are other data. There are other data fields in our database that aren't being surfaced via that method. So what we've decided to do, I think we did this in July of 2025. Under the Instruments tab, everyone now has access to this. If you click on the Instruments tab and open up the instruments, obviously all the standard universes you'd expect, unit trust, NOICs, pensions, insurance, etc. But right at the bottom, you've now got UK MPS, and you don't have to enable yourself for any of this. All of these are just by default enabled. And I can click on UK MPS, and as if by magic, they all appear. I can go and grab Let's go and grab Quilter. Our friends at Quilter. Quilter WealthSelect, probably the most popular models, or one of the most popular models out there. So I can click on Quilter WealthSelect model portfolios. Again, I haven't enabled myself for any of this data, and I can open up the list, and there's all of the Quilter model portfolios. Their actives, their passives, their blends, etc. And if I go and grab any one of their models, click on add that to my active list, and there's loads of things I can now glean and understand from the data just staying over here on the left hand side. So every single model portfolio that I add to my active list has a little fact sheet icon, so that now comes to life. So if I expand that out, you'll see this is actually another edition. We've got Crown ratings, so there is no widely recognized quant-based rating for an MPS. A lot of you will use fund ratings, or have used fund ratings historically, probably have used our Crown ratings. We've now been able to use that same methodology and just simply apply that to MPS. The methodology doesn't need to change. It's looking at past performance, it's looking at alpha, it's looking at volatility, it's looking at consistency. That's the same. Whether it's an MPS or a fund, you should use the same methodology. And it also makes it slightly easier then to cross-compare against different universes. So Crown ratings will appear on all these MPS, so long as they're of an appropriate age. I think it's 3 years. We've also got sectors now that I'll come on to in a minute. So every single MPS is part of its own MPS sector. Again, there is no widely recognized MPS sector. A lot of advisors still use, understandably, still use the mixed investment sectors, which are baskets of multi-asset funds, not basket of MPS. So we've created these basket of MPS. We're able to show you what the average MPS has done that is similar to the one we're looking at here. Also, though, as I said, there are other fields in our database that can be populated that we can now surface via the universe that we weren't able to surface via the directory. So things like size, the AUM, how much money are they managing? So that will be updated periodically by the provider. We can also surface stuff like yield. And again, this is the sort of stuff you can filter on as well. Objectives of that provider or that particular model, who the managers are, what the OCF is, what the AMC is, etc., etc. We're also able to surface documents as well. And again, this relies on the providers providing us these documents, but we've been providing and disseminating documents for decades: kids documents, semi-annual reports, fact sheets. DFMs also produce a lot of material, so we can now take their material and surface them in the same way that we do with fund documents. So in terms of this is a fund provider document, so you'll kind of get the point. This is their marketing material, but you can now access that through analytics as well. You've also got a performance tab as well, so you can then very quickly compare that MPS versus the new sector that we've put together. So again, the sector looks at growth content, basically ultimately equity content. So all of the other solutions that have a very similar equity kind of percentage to this solution is that red line, somewhere between 45 and 65%. And then there's the WealthSelect Model 5 that's done very well, and also analysis against that sector as well. So suddenly, again, now we've got sectors. It means we can have Crown ratings, but equally, because we've now got sectors, we can have quartiles. So suddenly you'll get the quartile rank pop up and the absolute rank and everything else. So cumulative discrete, also the volatility of that fund versus its sector, and ultimately at the top as well, breakdowns. So we're not going to disclose holdings data. That's embargoed, but we can still disclose sector, region, asset, and equity blend as well, defensive and growth, and credit rating as well if it's invested in bonds. And then at the very end, I haven't had to enable myself for any of this. I know I keep repeating myself, but just worth pointing that out again. So very quickly, I can get really nice one-page fact sheets. If I'm maybe recommending this to a client, I've had a look at some of the solutions available, and we're thinking about now recommending the WealthSelect model to a client as a nice little one-pager that takes all of that data I've just spoken about and aggregates it into a nice little one-pager, but more importantly, branded with your logo up at the very top. As fact sheets, you've also got alerts, which are useful. And again, this is the underlying, the existing infrastructure that we've already had for funds, but we can now apply to MPS. Now you can add an MPS to the universe. You've got the alerts that have always been available. So I can now start alerting myself if any significant event happens to this particular MPS. So for example, if those, we just looked at them, we looked at the charges of the model, we looked at the performance of the model, we looked at the fact sheets of the model. If any of this stuff changes, let me know. For example, now the models have a price because they're pricing in our database. If the performance of that MPS ever goes up or down by 10%, let me know. Fact sheet information, stuff like the annual charges, the DFM charge, the fund size, OCFs, etc. Again, if any of that stuff changes, I want to be alerted on that. The ratings at the moment, it's 5 out of 5, wonderful. But again, that will get rebalanced every 6 months, January and June or July. So again, when that changes, let me know. And if there's any brand new fact sheets published on analytics, again, let me know. My email address or your email address will be pre-populated at the very bottom. that will be where the alerts are tethered to, and I can click on save, and all those alerts will be sent to me as and when they're triggered. So I can set up as many of those as I like. There's no restriction. In terms of the sectors, just very quickly, I think that was in the 45 to 65 sector. So if you click on the sector tab at the very top here, as with all the other sectors on analytics, you've got them all listed in here. So I can click on 65, 85, add that in. If you click on the UK MPS universe, that is, and you'll see that every single sector's got its own fact sheet as well. So if I actually wanted to have a look at the sector and have a look at all of the underlying constituent MPS solutions within that sector, I can load this up, gives me a nice little summary, how many MPS solutions there are within the sector, the average risk score, the best performers, the worst performers, most volatile, least volatile over different periods. Probably the most important tab is the members tab up here. So it shows me the 300 odd MPS solutions and their risk, their ratings, their performance, their volatility, etc. Now, also by applying the universe on the left-hand side, it also allows me to do filtering. So this is quite useful, but it's almost like a static HTML screen, so I can't really sort any of this stuff. If I wanted to run an overlay or a filter above this to say, well, actually, I'm looking for a particular type of fund within this sector, or sorry, MPS within this sector that's achieved A, B, and C. If I come back to the main screen, if I click on that little filter tab at the top, again, anyone that's familiar with analytics will know you can filter on fund data, or you can filter now on MPS data. So there's nothing stopping me building brand new filters, particularly if I'm trying to do some due diligence across the entire MPS space. I don't know who I want to use. Maybe I'm looking for a decent ethical solution or a passive solution, or model portfolios that have outperformed their peer group consistently over various different time periods. You know, whatever your objective here, you can now filter on that universe. So again, just make sure the universe is selected. There's 1,500 solutions in total. And on the left-hand side, start adding them across. So we've just had a look at our FE crown ratings. So we can say, okay, well, out of the entire sector, I don't want to look at them unless they've got at least 4 crowns and above. That's why we brought it down to 284. Also, I want to make sure that they're part of a particular sector, maybe 45, 65 again. So that will show us the 78. Bit of consistency. Let's make sure the quartile is equal or above second quartile over 1 year, 3 year, and 5 year. How many does that give us? Down to 43. And I can keep going. If you can't find anything, by the way, just simply type it in. So I could say, look, I'm looking for a decent ethical solution. So click on ethical, pops up. I can add that across. There shouldn't be a huge amount. There we go, down to 1. Perfect. So once I finish with my filter, I can save all of these filters. So this could be my yearly due diligence filter. So I could just simply save it as that, and it will just simply update for me daily, and I can check again in a year's time. So you can save as many filters as you like. But for the purpose of this, I'm interested to know, okay, well, I was looking for a really good, decent, consistent performing ethical solution. Which one's it found me? It's found me the Funhouse model. Great, perfect. I can click on that little backwards arrow, flings it back to the main screen. I can come away from all of this, and there it is. There's the Funhouse model portfolio solution. Again, I've got the fact sheet. I can look at more information about it. I can PDF the fact sheet, show my client, etc. Anything on the right-hand side, you still use the directory for that. Just to point this out, if it wasn't obvious, if I go and create, say, a 5-year performance graph, it won't actually let me, I say let me, it does obviously load up the chart, but it only pulls across the sector. So the sectors, you can do whatever you like with them. You can put them into tables, you can put them into reports, you can put them into charts. So that's the performance of the sector, and you can compare that against whatever you like. If I wanted to compare that, though, against Funhouse Model Portfolio, WealthSelect, or any of the other MPS solutions, and back on the main screen, I've just got to click on this little button, maybe for Funhouse. It loads up the MPS universe, sorry, the MPS directory. I'm getting confused, but the MPS directory will load up, and then similar to where we started, I can come down to Funhouse, and then I can activate myself for their models. And once they're activated as a portfolio, that then unlocks all the other areas of the system. So we kind of see that the MPS universe will be used for kind of light research, kind of preliminary research to analyze the entire MPS space. And then you've got the directory on hand that will then give you that deep research and deep kind of due diligence into the solutions that you've already selected, that you've already picked as part of maybe your centralized investment proposition or retirement proposition. Super. So that, I think that's the MPS universe. Just come back to my list. Okay, let's go across to charge comparisons. So this kind of relates to what we've just spoken about here. So good way of explaining this. Well, if I'm doing a charge comparison, trying to figure out, okay, well, I want to recommend the Life Strategy Fund for a client, the Vanguard Life Strat. Again, probably one of those popular funds out there. I want to recommend that to a client, and I want to see what the cost would be on Transact, Scottish Widows, and Aviva. Now, if I pick the same share class, it's going to be the same cost for the fund. Clearly, the charges for the platforms would differ, and my charges would always be the same. So it's going to be a slight difference between them. But ultimately, when I'm looking at funds, excuse me, when I'm looking at funds in here, let's go and find LifeStrat. If I go and grab one of these, this is the 40% AAC. If I go and look at that fact sheet, again, apologies, I'm teaching you here to suck eggs. I appreciate this is pretty obvious, but the charge of that fund is 22 basis points. So it doesn't matter what platform I access it on. It's always going to be 22 basis points if I'm always selecting that same share class. AAC is the same charge on every single platform. The platforms, again, the platforms will have different charges, of course. So when I'm doing a charge comparison for fund, it's made relatively simple by the fact that if I'm using the same share class, I know it's going to be the same cost. Obviously, that's not true with MPS because the MPS solution itself will structure itself slightly differently on the platforms dependent on the share class availability. As an example of that, if my simple example, my model portfolio looks to invest in the Z share class of every fund, because let's just say that's the cheapest, and Transact gives me that. So when I invest with my model on Transact, the basis points is maybe 33 basis points. But when I go to another platform, they're not able to provide the Z share class because for whatever reason they don't have that available. So I'm having to use the Y share class for a couple of my funds, and therefore for that particular model, maybe the basis points is 36. Maybe my OCF is 36 on Aviva, but it's 33 on Transact. Hopefully I've explained that well enough. But my point here being that when you try and run some sort of pension switch or any kind of charge comparison using an MPS, it's made significantly more tricky given that the charge of the MPS itself is going to differ depending on what platform you're looking at. The platform charges are going to obviously differ, and so will the MPS OCF. My charges will be the same, but those two would differ. So what we've done is a very long lead in to explain what we've tried to build here. But when I looked at the WellSelect model a second ago, it was showing me what the standard OCF was. I can't remember what it was. Let's say it was 34, again, 34 basis points. So that's the standard model charge. So what we've also done is collect all of the OCFs of all of the different platforms for you as well and hard-coded them into our charge comparison tool. So if I, on the left-hand side, if I load up our charge comparison tools, one of these, they're pretty much one of the same. One of them's used for when you've got seeding schemes, the other one is used for when you've not. And if I click on the portfolio tab over here, when you go into the charge comparison tools, if you click on add new at the top and click on pre-configured DFM and click on continue, you'll load up all of the DFMs on the system. So these are the ones we've built. I think at the start of this time last year, I think we had 3 of them. I think Tatton are on there, FBI are on there, and one other. So you can see we've got a Quilter on there as well. So those are the 3. We've added all of the others. So I think we've added about 8 or 9. And the idea being Fundhouse were the latest to be uploaded. So we'll kind of pick on them. If I click on Fundhouse, you'll see all of the models are hard coded for me. So I don't have to come into this area of the system and rebuild this and tell the system, okay, well, I want to use the Fundhouse index plus balanced model portfolio. And now I also need to tell this system that actually the OCF for that Fundhouse model is slightly different on every single one of those platforms. I've got to manually pop that in. And then I have to keep on top of this as well, because when Fundhouse make a rebalance, those charges are all going to change. So I have to come back into the system and pop that all in again. You don't have to do that because us and Fundhouse have built that for you. We'll be regularly monitoring that and making sure that's updated. So whenever I want to use any of these MPS solutions within our charge comparison tool, you know that the overall aggregated charge is bang on accurate. So to run through an example of this, I'll come to my consolidations. This is a consolidation work I'm working on at the moment with Keith Baker, a client of mine, a pretend client of mine. I want to project over the next 10 years. Maybe into decumulation. These are the 3 seeding schemes he has. He's got an ISA and 2 pensions. You can add as many seeding schemes as you like. Click on that button there. You just simply need to tell it what the value of the contract is today and what the charges are. If you don't have the charges, you can just put the valuations or the projections that you've got from the seeding scheme, and it will work out the charge for you essentially. But once you've got the seeding schemes, the ISA and the 2 pensions, I've used this purposely because I'm showing you that you can do cross wrapper. You don't just have to do pensions. If you've got assets all over the place, you can combine them into one bit of research. And it says, okay, where do you want to put these assets? So I've got 1 ISA and 2 pension. I want to put the ISA where? Well, again, just going to pick one solution here. You can blend, you can build your own portfolios. It's incredibly configurable and flexible. But for the purpose of this demonstration, because I'm talking about Fundhouse, I just want to put the 1 ISA into the Fundhouse index balanced, and I want to put the 2 pensions, aggregate them together on one platform to the fund house index balanced as well, equates to just over £1 million. It works out the projections based on the seeding schemes that I've just added. So it's going to do 1.5, 4.5, and 7.5, and the ISA pensions 2, 5, and 8. I can then add in my advisor fees because I've hard coded them in here. And if I then just click on next, again, it knows all of the platform tiered charges. It knows what platforms that MPS is available on. It doesn't just know what it's available on though, but it knows the subtle difference in cost of that MPS across every single platform. And now, more importantly, it knows my advisor fee as well. So give this a few seconds. It's now trying to calculate a ton of analysis to look at across all of those 20 or so platforms, which would be the cheapest to put this new business on. Now, I'd stress at this point, most people have a centralized investment process and you'll probably only be using 3 platforms. So at this point, you're probably thinking, I don't need to know what it is on the other 17 platforms. I only use Aegon, Aviva, and Fidelity. That's absolutely fine. You can click on the exclusions tab on the left-hand side, and you can basically hard code an exclusion on day one and say, look, whenever I run analysis in 2026, ignore these other 17 platforms because we've committed not to use them. So every single time I get to this stage, it will be a darn sight quicker because it will only have to run that analysis on the 3 platforms that you do use. Hence why it's taking a little longer here. I might just let that run its course. Seems, is it going to do it? Just whilst I'm waiting for that to load up, just might as well get through another development last year that kind of relates to what we're talking about here. If I click on the portfolio tab, any portfolio in analytics, if I go and grab my mate Keith, if I click on edit and load up that portfolio, there's a couple of little integrations we've built within analytics. And coming back to my my visual about what the Nexus Wealth platform looks like and how we're trying to build this ecosystem of solutions that integrate into one another. We've got analytics, we've got CashCalc, we've now got Command Deck. We want to allow you to kind of float and move this data around that ecosystem. So as part of that, again, ambition, we've got these 2 new integrations set up at the very top here. So if I wanted to push that portfolio into Advisor Asset to start doing some charge comparisons on it, I can just simply click on that button and then I can import it into Advisor Asset. I'm going to show you this in a few moments. What you can also do, this is one of the biggest developments we released last year. I can also export that to CashCalc. So I can push that portfolio directly into CashCalc and then start running some cash flow analysis on it as well. So I'm going to refer back to that in a couple of minutes when we jump into CashCalc. And so remember that Keith Baker pension, let's just say in my imaginary world, I've just pushed his portfolio into CashCalc and I'll show you in a few seconds what you can do with that. If I come back to Advisor Asset, I should have finished by now. There's all of the platforms. Which ones have got platform ratings as well. If I'm going to select Aegon Arc because I'm being a bit lazy, but that's the cheapest one. That's just simply ranked from cheapest to most expensive. Now what it's going to do is it's going to run a secondary set of calculations and compare those 3 seeding schemes and what they cost versus what my proposed solutions are costing. So again, give that a few seconds. It doesn't usually take this long, so this might be my internet. Here we go. So it's running it ran a 10-year analysis. So it says, look, your current cost, Mr. and Mrs. Client, of the 3 seeding schemes aggregated together, it's costing you 1.39% every year, the drag on performance. And if you extend that out over 10 years, your current portfolio is going to be worth about 1.44 million. If it continues to grow at that 5% mid growth rate at the top here. What we're proposing, even with an advisor fee, because we're using passive solutions and because we're able to aggregate all those assets onto an incredibly kind of cheap, competitively priced platform, the aggregated cost for all 3 of them is 1.02. So significant rate with the critical yield is 0.37, so significantly cheaper by moving those assets. So it's quite a simple thing to demonstrate, but as you can imagine, there's a huge amount of heavy lifting and calculations being done in the background, made far simpler because we've hard-coded all those MPS solutions for you in the background. We will continue to add them. If you looked at that list, obviously there was about 11 of them. We've got about 86 MPS providers on the directory. So the idea and intention is to get them all moved across and hard-coded onto this area of the application as well. So if there's any on there that will seem to be missing that you want them to be added, it's a very simple process, doesn't cost anyone any money apart from our time. That's not your problem. You feel free to go and badger the MPS providers because we're badgering them ourselves, but the more pressure you can apply, the quicker that will be. But there's no reason for them not to be on here because it makes your life significantly easier. Super. I think that's it for analytics. Just remind myself. Yes, cool. Okay, let's I've just kind of focused on this one, FE Analytics for FE CashCalc. That kind of leads me nicely into CashCalc itself. So If we load up CashCalc, probably worth pointing out as well, this wasn't last year, I think this was the year before, but we have got a CashCalc integration. So if you want to very quickly move into that area of that Nexus ecosystem, you can just simply click on Portfolio Tools and CashCalc will load up as it has done here. We've added a ton of additional features and enhancements to CashCalc in 2025. So the first one, as I've already said, is the integration between analytics. So I've pushed Keith Baker into CashCalc. What does that mean exactly? Well, if I have a look at all of my clients in CashCalc, I've got Keith Baker here. So I'm going to load up one of his existing cash flows, which is this one. The sun shining, bear with me. It's a nice problem to have on a cold January, sun in my eyes. That's better. So this is a cash flow that I've already created for Keith. This takes into account his pension. I think he's got an NS&I bond in there and maybe an ISA. I've already forecasted it for Keith, and I'm assuming that his pension grows. I think I've got it about 4.5%. Keith Baker's pension is a kind of moderately cautious portfolio. It's a 600,000 account here. I've got it growing at 4.5%, and that creates a cash flow model like this, that dark blue patch growing at 4.5% until he retires, and he's going to start drawing down from that pot. And then they're going to run out of assets by the time during their early 90s. However, why have I selected 4.5%? Well, that's kind of gut instinct more than anything else. It's a moderately cautious portfolio. It sounds about right, growing at 4.5%. But clear, as I always say, that's not really going to wash with compliance or FCA when they ask you why did you pick 4.5%. There's no kind of logical science. It's just kind of gut instinct. So we've tried to help you with this. If you open up any one of your pots and click on template, you can select any of the portfolios you're pulling across from analytics. So in fact, if I just simply type in Keith, it should find him for me. There's Keith Baker, and it would basically create a growth rate for you. So I used 4.5%. Well, actually, analytics and CashCalc and FE Fund Info, things 5.4 would be a lot more relevant and relative for this particular portfolio. And we're doing that by taking the asset allocation data that we have on analytics for you, and every single asset class. Maybe this guy invests in a bit of American equities, European equities, UK equities, gilts, bonds, property, yada yada yada. We've got a different growth assumption for every single one of those asset classes based on 40 years worth of historical data, annualized historical data. So we're crushing that together, and that's now a bespoke linear growth rate. We're saying, look, if you look back at this particular portfolio, this particular asset mix over the last 40 years, it would have generated about 5.4 compound every year. So that's what we think you should be using. So if I now update that, and I can, again, when the FCA come knocking or compliance come knocking, I've got something a little bit sturdier than just gut instinct. We can say we've used kind of 40 years worth of historical data based on that asset class mix. And suddenly, if we looked at our cash flow model, it's changed it quite considerably. We're still running out of assets in our 90s, but it's more late 90s rather than early 90s, which probably makes quite a big difference to our client. And the other use for this will clearly be comparisons as well. So, okay, this is Keith Baker's existing assets. What about that fund house model? What about that Quilter WealthSelect model? We're actually suggesting you should be a bit more adventurous than this. This is a cautious to moderate portfolio, maybe 50% equity. Based on your risk profile, we think it should be 60, 65. So let's run a comparison between the two. I won't do that now because we're kind of we'll struggle with time, but that'd be another use for this, to compare them side by side. Where else that appears is under stress test and Monte Carlo. So because we're pulling across asset allocation data, actually a good one to, I will do that. Might have the fund house one on here. If you you can see that the current assets run out, that current pension portfolio runs out when the client's about 93, 92. So if I click on Monte Carlo simulator and run a Monte Carlo simulation, this will show you quite quickly how a comparison will work. If I look at running a Monte Carlo on, there's the LGT one. Let's do that one. Let's use LTG growth. Actually, what is it? 92. Let's run it at 92. Let's run that again. So what we're doing, we will show you what the underlying portfolio has done. We pulled the portfolio across from analytics into CashCalc. That's the green bar. It runs out about 92, 93. And then what you're able to do is say, well, look, we're recommending something slightly more adventurous, which is the funhouse model portfolio, whatever that looks like. And whereas I can compare them on the standard cash flow that we did a couple of moments ago, I can also compare them using stochastic analysis. So it isn't just deterministic, it's also stochastic. So what I've done here is we're using the underlying Keith Baker portfolio, which is that light green. And then I'm saying, look, run a stochastic analysis of the LGT growth portfolio and run 10,000 simulations over the top. So take the current asset allocation, the historic growth rates, the historic volatility rates, run 10,000 simulations on that kind of portfolio and show me the potential of that running out of money by the time it hits 92, 93. And it's saying, well, look, if you take that bit more risk, Mr. and Mrs. Client, again, we can show you on charts and analytics, we can show you the two cash flows side by side, but equally we can compare them on a stochastic analysis and say, well, with 10,000 randomized simulations based on the data we pulled across on analytics, you got a 96% chance of not running out of money by the time you hit 92, which is currently what your existing portfolio is probably going to do if you don't switch it. So yes, when you pull the portfolio across from analytics, it doesn't just appear in the cash flow. You can actually have it pulled through into the Monte Carlo tool as well. For those of you that joined the webinar late, do remember there's an opportunity to ask questions. So if you've got any questions on any of this, feel free to ask questions with that little question box on your side. And we'll answer those throughout the webinar, but also I'll try and answer them if there are any left unanswered at the end. One of the main areas of CashAccount we've improved last year, which was a core focus of us, was our gross modeler. Now, just to quickly explain why we have a net and a gross, when you select cash flow at the very top here, you will have two options. You can either run a net modeler, just wait for that to load up, a net basis or gross basis. Now, the difference is, let's go into gross. The difference is net doesn't really do any of the tax for you. It's a much simpler modeler. So I was just in the net modeler a second ago. It's a much simpler cash flow to pick up because there's less buttons. There are less options for you. So certainly for simpler cases, simpler cash flow, or certainly for advisors that have not done cash flow in the past, and this is completely new, the net model is brilliant because it's a very simple way of really getting into the weeds of cash flow before diving too deep into the gross model, which is what we're going to look at in a minute, because that's the one where we've added most of the features over the last year. When I say it doesn't do any tax, I basically mean when a simple example of that is in the net modeler, if you're putting in someone's salary, you'd be telling the system what the client's take-home pay would be. So the client is on X, but I'm not going to put X because that's going to reflect the cash flow figures. I'm just simply going to say what the take-home pay is, and then the system, and you don't have to work out the tax. So the results are the same, but you're just putting in the figures net rather than gross. And also stuff like CGT as well. It's not going to do any kind of CGT kind of tax if you're starting to take assets from something like a GIA. So what you'd have to do in the net modeler, again, you can account for it, but it's a bit more heavy lifting on your part. You're going to have to say, look, the client's going to be taking X amount from the GIA in 10 years' time. I expect the tax charge to be X, so I can then just add in extra charge manually. But therein lies the problem. You're then having to do a bit more of the heavy lifting when it comes to the tax calculations. I would say with the net model, it does do the pension tax to a certain extent. When you're taking money from a pension, it does actually ask you to specify a tax rate, 20%, 40%, etc. But it's a kind of a flat rate. It won't adjust if the client's income goes over one of those bands, for example. So that's why we have a gross modeler. So once you've become accustomed to cash flow, once you want to use something a little bit more sophisticated, maybe for certain clients, the gross modeler is kind of that natural tendency to then move across to. The other good part of having a net and a gross is there's a lot of advisors that deal with offshore clients that may be expats that aren't necessarily affected as much with UK tax as their other clients actually live here. So having a net modeler is actually quite good because actually I don't want any of the tax included. It's almost like an on and off switch. So hopefully that's a good enough summary. But with the gross model, we've added loads of extra. Most of the enhancements over the last year have really been around the tax logic. So there's not really as much to show, more kind of to signpost where it all sits. So the modeler itself on gross looks a little different. You've got a lot of tabs on the left-hand side and all the input screens on here. One of the adjustments we've made, if I go to the cash flow, it should be showing it on here. This particular client, if I look at money in, money out, you'll see these are their incomes, okay? So these are the income bars, and every single year they make, no, that's probably about 80K a year combined. But if you look at their expenses, if I turn off the other two, their expenses are, where's the expenses? About 56, is it? So there's a slight surplus every single year compared to their income and their expense. Now, realistically, there probably wouldn't be an income, although there is technically, a surplus. Realistically, every year they might spend extra money on a holiday. There's a load of extra money in the current account. Great. Well, you buy a new car, or the kids gobble it up with all the activities we do for them every year. So although there's technically a surplus, I don't want that feeding through into my cash flow. So what you can do in the net and the gross modeler is turn that off. So rather than on my cash flow model, rather than that just aggregating into that current account, which is that dark green figure here, and just slowly growing, and it kind of distorts the overall cash flow image, because realistically, as I said, we're not going to be saving this. On the net and the gross model, you can basically turn that off and say, well, rather than saving 100% of 80% of any surplus, or actually, you know what, zero, I don't want to save anything. What we've done on the gross model is actually allow you to say yay or nay whether you want to continue saving that surplus, but also rather than having the surplus accrue in the current account, I can actually deflect it into one of my other pots as well. So it's a neat little addition. We had a lot of clients asking us for this. So maybe the clients got an extra couple of £100 every month in surplus, and rather than just completely ignoring it or just simply having it accrue in the current account, my client is going to maybe is committed to putting more into their ISA every month. So just want that surplus to slowly accrue into that Hargreaves Lansdown ISA of theirs, etc. So again, a small addition, but quite useful. A lot of people have asked for that. So I can deflect any surplus to another pot, which is quite useful. One of the biggest, well, a couple of big bits of development in Cash Calc were again around the tax treatment on chargeable gains for bonds and GIA when it comes to CGT. So you'll see when you go and create an investment pot on the gross modeler, you'll have to categorize the pot as something. So if I categorize it as a GIA, it now knows that it's open to CGT. What was the original investment? Well, maybe the original investment was 200,000. Now the starting pot is 250, so that it automatically knows there's a gain, and then I can tell it what that's going to grow at, maybe 4%, and then also allows me to type in any interest or dividends, etc. Now, by simply doing that, the moment we start taking money from that pot in 5, 10, 15 years, it knows the growth, it knows the original value, and therefore it has all the calculations necessary to run that calculation on the fly and take off any charge when it comes to CGT. So it's just worth pointing out, the moment you classify anything as GIA, you'll automatically do the CGT for you. Bonds are the same, onshore and offshore. So whenever you select onshore and offshore, you can say what was the original investment. In this case, it was again 200,000. Starting pot's 250. So again, it's grown by 50k. How many policies? Let's say that's split over 100 policies. And let's just say this was initially invested in 2015. For a bond, you can put in any previous withdrawals or any previous top-ups. So you just simply specify the date and how much. And again, this is more heavy lifting on your part, which is why the net model is so much simpler. It doesn't do the tax, but there's less things to put in, so it's a lot easier to pick up. With this, there's a lot of options, but it's a lot more sophisticated. It's now going to, again, do that heavy lifting for you in the back end when it's calculating the tax. But again, so when I start taking money from this bond later on, when I start withdrawing money from the bond, it's going to have all of the necessary information here to work out what that chargeable gain is. So those are the two big additions we made on the gross. Moving on to pensions, we did inherited pensions on here. Again, this was requested by a lot of clients. So when you're adding a pension into Cash Calc, a neat little feature, you can specify whether it's inherited or not. So if I click on inherited, it will just simply ask me, okay, well, if it's inherited, is it therefore tax-free? Because whoever you inherited it from, did they die before 75? So if so, I can now kind of signpost that and tell the system, yes, it is tax-free. So again, any money now taken from that pot, the system automatically knows it's tax-free. Or equally, no, well, actually, no, it needs to be taxed as income, and therefore the system will automatically know what the income band is that your client's taken for each particular year, because you've got the salary information and income information in addition to this, and then therefore it will tax it correctly. So again, a nice little flag, additional flag for inherited pensions, which is useful. You've also got a load of enhancements we've done for the DB pension as well. Beforehand, for DB pension, you would have just simply had to type in an existing income. This similar to if you're in payment. So you know the DB pension maybe pays 40,000 a year. So I could just type in 40,000 a year. That's an extra income, and again the tax would kick in. Or the tax calculations will kick in, and the cash flow would adjust accordingly. But the difference is, okay, what about if they're not in payment at the moment? What about if they're still they're a deferred member, an active member? So therefore, you can start typing in the scheme details of this DB scheme. So when the client does finally retire, you don't need to tell the system what the income's going to be. It can work that out for you. So you can say what income is it linked to. So these are all of the incomes that I've already added to the system. So I've got one income simply called salary. So yes, this is linked to his salary. That's the pensionable salary at the moment. What type of scheme is it? Is it career average or final salary? So I can pop that in. What's the current value of the benefits, the desired lump sum, and then further scheme information like it's on 1/60th factor, commutation factors for the lump sum, etc., etc. So again, more heavy lifting on your part, admittedly, having to type in all the scheme information, but again, the system will work that out. The moment this client retires, it has all the information necessary to work out what that DB income is on the date they retire and going forward, and clearly it knows all the income that the client's making on that date as well, so work out the appropriate tax for this income. So that's DB income. And also, this is actually tied to DB income. Under incomes, you can make the income vary. So again, for the net modeler and the gross modeler historically, if I had a client that was maybe got a salary here of 70,000 a year, but they're likely to take maybe a part-time role in the next few years as they come into closer to retirement. Maybe they're hoping for the few years leading up to retirement they're going to be part-time, or maybe in reverse, maybe you've got a salary to bump up to X. Beforehand, you would have had to create multiple line entries here. You would have had to go into the system and say, well, do the 70,000 salary from today for 5 years, and then have another line entry for in 5 years to when they retire, make it part-time. You can now vary that in one salary, meaning that when I click on add income, you've just got add income change here. So I can press that as many times as I like and put another gross salary in. So maybe the existing salary is 70,000, and then salary from this date to this date, you've got the start and end dates here, is maybe 50 or simply part-time. I say it links to the DB income because if I've put all the information necessary for a DB income calculation, it's going to very much relate to this person's salary. So that's why it's asking you to link them. So it now knows, particularly in kind of a career average or final salary, if you then start varying the income, the calculation of the DB income will change as well, which is quite neat. So they are linked. You've also got at the very bottom here, this is another addition. You can also do pension contributions from salary as well, and from the bonus, any bonus that you have. So salary sacrifice information. Again, beforehand, you would have had to do that manually. You don't have to worry about that now. Again, put the necessary information in here, and it will then work that out when it creates the cash flow image. I think that was all of them in terms of the tax. Yes, good. Also coming back to here, the other feature, this is not so much to tax, but in terms of transfers, again, another request we had from a lot of clients using the net or the gross modeler. If you ever wanted to transfer from a pot to another, you always had to go via the current account. So I would always have to set up a withdrawal first to withdraw from pot A into my current account. And then I'd have to set up a contribution that goes from my current account to pot B, which is kind of necessary because that's kind of what's going to happen, or that's what is likely to happen for the vast majority of transfers. It's going to go into the current account and then out to pot B. But I could never very quickly set that up, so I just simply migrated from money from pot A to pot B. So that's why we've set up transfer, particularly stuff like bed and ISA or bed and pension. Again, it just saves you a bit of time rather than having, again, you can still do all of this on the net and the net modeler, but it just takes a little bit more work your side. This is hopefully trying to alleviate that for you. So if I just simply set up a transfer, it's very simple. You can just simply say, look, from what pot to what pot? You can say, look, from my GIA to my ISA, what's the description? Again, I could call that bed and ISA. And what's the amount? I could just simply say, look, every single year, £3,000 move from the GIA to the ISA from a date to another. And in the background, in the back end calculations, it's still going to do that. It's still going to move from pot A into the current account and then into the ISA, but it just makes your life a little easier rather than having to add all of that in, add multiple line entries. You're just doing it once. Again, this was just simply another kind of request from quite a lot of clients that we prioritized and added last year. Super. What we do for time? We're running out of time. So just a couple of other things we've added, which is one of the things we've added on CashCalc. If I come back to my clients, if I come back to Cynthia, new client. This is a client looking for guaranteed income. Obviously, guaranteed income was pretty popular last year and the year before as kind of the interest rates have kind of crept up over the last few years. Guaranteed income has been something a lot of people are looking at. We basically hard-coded and tethered Just's SLI solution in 2024, I think late 2024, and in 2025 we added GLI with Standard Life, meaning that if I've got a cash flow with a client and I want to see what life looks like if they were to think about using a guaranteed income solution rather than just kind of traditional drawdown, rather than having to manually build all this myself, I can get a dynamic quote pulling through into the system. So for this client, they've got a living cost of £2,000 a month. That's all we want to look at. We're simply looking at one pot of money, and it just needs to cover that £2,000 a month every month for her once she retires. And we're looking at what that looks like, and we can see that it runs out of assets by the time she's just coming up to 101st birthday. She's still got about 43k left in the tank. But I now want to compare this and see what life would look like if we used a guaranteed income solution. So if I clone the forecast first of all, so I'm just going to clone that to with GLI, click on create. I'll have two. I'll have with GLI and basically one without. So without secure income, one with. And if I click on contributions withdrawals, if I click on quick add and click on guaranteed income drawdown, basically for a quote, I can either do now just or standard life. So I can do standard life, continue. We can say, look, using that pension pot, the 655,000, it's £2,000 a month, so 24,000 a year is the income requirement. I don't want to add value protection. It automatically pulls through the necessary information from the fact find, the postcode, the state of health, and the smoker, whether they're a smoker or not. Basically, all the information Standard Life need to generate an indicative quote for us. So all of that information is sent to Standard Life. They crunch the numbers for us using a new API. That information is then sent back to us and says, yep, we can cover the £24,000 a year, and that's going to cost 309,000 of that pension, of which there's going to be 345 left. What do you want to do with the 345? Do you want to just leave it where it is, or some of that into the smooth fund of Standard Life? So you don't have to put all of it, but I could say yes, maybe to offset sequencing risk, I could say we'll put 50% of the remaining pot into the smooth fund, and we'll start taking from that initially. So just add an extra layer of complexity. But the moment I click on continue, doesn't take more than a few seconds, but again, it adds all of those line entries necessary to actually show that on a cash flow. So you can see under savings pots, it's automatically created a brand new pot for smooth fund because it's expecting half of the remaining pot to land in the smooth fund in the next couple of years once the GLI purchase is made. So there's nothing in there yet because it hasn't been bought. Also a growth rate of 6.34 because that's the assumed growth rate of the smooth fund, although that's gross, not net, because there's no charge. So what we've had to do is under cost and purchases, we've added the 0.8 OCF or AMC for that smooth fund. So that's going to be taken off that growth rate for you. We've also got the purchase of GLI in there as well, and all the necessary contributions as well, contributing to the smooth fund, contributing to the GLI coming in, etc. This is just really to show you literally within 2 seconds, all of those things have been added for you rather than you having to do it yourself. And if I come to my cash flow model, as if by magic, it's updated for me dynamically. We can now very quickly show a client, well, look, Mr. and Mrs. Client, using traditional drawdown, which is the bottom one. You know, yes, by the time you're 100, your pot's going to be about 40,000, and it certainly probably wouldn't cover long-term care, etc. With our Standard Life solution, it can guarantee that income for you every single year, and by the time you hit 100, there's 278 still in the pot, and then we can talk about inheritance and passing down to loved ones, etc. So that we built that in April of last year. It's been very well received. And again, if there are any other providers out there that you use that aren't on here, again, feel free to badger them, and we can look at integrating them the same way that we've done with Just and Standard Life. Just want to introduce you to, there are lots of videos on this already. Just want to introduce you to a couple of last things. This is our Nexus AI Note Taker. So this is a new AI application we launched at the very end of last year. Very, very excited. We launched it in October, November time, and we're now going to be building out our AI applications over the coming months. And again, the priority is going to be those that is basically going to come back from feedback that we get from our clients in terms of which ones we prioritize. But at the moment, the AI Note Taker does exactly that. It sits in every single meeting that you have with a client. It takes all of the necessary meetings, all the necessary meeting notes and all the things that are discussed during that call. And at any stage, you've got, like, for example, today, I can see all the meetings that I've got today and going forward. On the left-hand side, if I load up this meeting that I had yesterday, this is a fake meeting between Sarah, the advisor, and Sherlock Holmes. And you can see on the right-hand side, automatically when Sarah comes off that call and goes into Nexus, it basically summarizes the meeting for her. And this is obviously hard-coded now, so she's got this at her disposal whenever she needs it. But it's all the key points that were discussed in that hour-long meeting that she had with Sherlock Holmes, discussing all of his ISAs and his premium bonds, etc. And at the very end here, all the next steps that they confirmed with each other. Now with Nexus, you can spin up lots of different reports. So this automatically spins up a summary for you, but maybe the conversation you had was around capacity for loss of knowledge and experience. You want to summarize it in a slightly different way, or maybe you want to provide some sort of vulnerability assessment. So the options here are limitless, but under Smart Actions on the right hand side, I've got a vulnerability assessment, which is quite neat. So I can click on generate document, and I can say, look, the live transcript that Nexus took in that meeting, spin that up into one of these different options for vulnerability assessment and generate. And automatically it does that. It looks at the transcript of the meeting. It's already been given some guidance in terms of what you want that summary to look like. So it's going to be now looking at vulnerability kind of signs within the transcript, and it's going to put that together for you. Come on. And then it's just going to load it up here, and it's going to give me a nice summary of any vulnerability for that client. And I'll give that a few seconds. In addition to that, what it also does is all of the information I've got in here, particularly around the valuations of particular assets and the growth of those particular assets, all of this, well, a lot of this information can sit in CashCalc. So the fact that the client's got a property in Baker Street of 1.8 million, and the fact they've got some objectives here as well, under Smart Actions, it's just thinking at the moment, but under Smart Actions I can push that into CashCalc. So I won't do that now because we're 4 minutes until the end, but if I click on Smart Actions, it will allow me to push that data into CashCalc. It will automatically create the client if he's not already in there, Sherlock Holmes, and then all the information necessary that I've collected in that meeting that can sit into CashCalc, it will push it through to me, like the ISA, like the NS&I premium bonds, and like the two objectives: to buy a car and to retire early. And there's a vulnerability assessment for that particular client loaded up, client background. And I've asked the system to look at health-related vulnerabilities, if it can find any of those, resilience-related vulnerabilities. Again, this is off the FCA good practice recommendations that they released a year ago, communications, accessibility needs, etc., etc. The assessment out of 5, how vulnerable it thinks that client is. And it's provided the assessment at the very bottom. So again, I can run that for every client. And just to back up what I was saying a second ago, I can click on push to CRM. I'll just let that spinning a while, but that will then ask me, it will then look through the clients that I currently have on CashCalc. It shouldn't be able to find him. There we go. Yes, let's just put it as Sherlock Holmes new client, and I'll leave that running its course. And then I'm conscious I'm running out of time. I've got 3 minutes left, so I won't wait for that any longer. But yes, ultimately that data can be pushed into CashCalc, and it will end up under the client tab in here. Just lastly, whilst I've got the tab open, back in here, let's load up Contengo. Just give you a bit of a sneak peek. This is Contengo. So Contengo, as I said at the very start, was the ability to aggregate all of this data you have on your platforms, on your back office system, giving you that full 360 view. So this is something we've been looking to acquire for a while now, and it's been something we've looked to build in the past. We've not really had the expertise to do it, so that's why I'm incredibly excited to finally have Contengo in-house. And Contengo really kind of completes that jigsaw puzzle that we've been trying to build of this Nexus ecosystem, these applications that do everything you need. You can't really provide that unless you have all of the valuation data and the transactional history and all of the data for each advisor, etc. So this is, maybe I'm the MD of a particular advice firm. I've got 4 or 5 advisors working for me. Any one of us can log into Contengo. We can see how many assets we manage, how many clients we look after, how many households we look after. I can load up any of my advisors, so I can look at Tyrell, for example, 32 million he looks after, the fee breakdown, the demographics of his clients, the platform splits, what assets are coming in from what platforms, and in 2025 there are all the different households and the revenue we made from each one of them. It looks slightly different for a network. Obviously, a network can look at the different firms and then break that into the individual advisors. So it is very much based on hierarchy. You can also create reports in Contengo as well. So because we're pulling across all the transactional data, all the valuation data, I can very quickly create these reports on the fly, kind of yearly reviews. And the yearly reviews will go into a lot of detail when it comes to the valuations, the asset allocation, the money weighted return of that client. But if I'm looking after 150 clients, creating 150 yearly reviews would generally take quite a long time. But again, with this technology, it doesn't need to. It can be generated effortlessly. In addition to that, also has a portal for clients to log in to access all of this information and to access, again, their money-weighted returns and their valuations. And also it's got extra functionality like building tasks and workflows. What we will do, again, this isn't for today, we will be creating a webinar over the coming weeks to fully introduce Contengo, because it needs a devoted webinar rather than just us going through it here. So it's bang on 11 o'clock. Let me just quickly go back to our PowerPoint presentation. Just quickly wanted to end on this slide. We run a lot of webinars throughout the year, obviously not just Demo Day Wednesday, but others, particularly stuff like Contengo. So hopefully you have found that webinar useful. Hopefully that's given you a really good flavour for what we've built. Hopefully a lot of it is new to you. As I said, we create a lot of marketing over the course of a year, make a lot of noise about these features, but invariably it's obviously quite difficult for everyone to see. So feel free to sign up to any of these webinars we've got coming forward in 2026, and certainly all of the features we're looking to develop in 2026 will have a webinar devoted to each one of those. So if you subscribe using that QR code in the middle, you won't miss any of those. Also, as I've referred back to it a few times, that LinkedIn post I made last week for this webinar, me and the team are quite active on LinkedIn. We're constantly posting about new developments, new features, things on the roadmap, what we're looking to build, etc. So feel free to, again, scan the QR code on the right-hand side and link in with me. And again, it'll be a bit more difficult to miss any updates if you do that. Super. I'm just going to stop sharing my screen, see if we have any questions. So bear with me. Don't think we have. Actually, there was one from Callum. Thanks, Callum. Is there a way to move income expenditure lines bunched together? No, so quick answer to that, Callum. No, you can't resort the order of that. No, it is as you say. They're as they are in the system. As you said, when I went into the gross model earlier, you could see that I removed some of those expense line. That was a feature I did a couple of years ago, which is quite neat. You can assign expenses as kind of basically critical or kind of, I can't remember off the top of my head what the different categories are, but you can remove those and have a look at the total line and discretionary spending, etc. underneath that. But yeah, you can't do what you're suggesting there. Super. Okay, guys, thank you again very much for joining us. I think I've just about survived that without coughing too much. So again, apologies if I've sounded a bit nasally today. But again, thank you very much for joining us. Hope you found that useful and look forward to seeing you on a future webinar.